the end of the year, which means Christmas or Hanukkah. But on top of that is also kind of like your last moment to make tax moves that are going to make your taxes reduced for this year. And I think this year is even more important because for tech workers, we're going to have some pretty significant changes coming from the One Beautiful Bill Act. And so, kind of the things that I would look at before December 31st is exercising your incentive stock options up to the alternative minimum tax limit. And that's most important for tech workers because in 2026, the One Big Beautiful Bill Act is going to be limiting the amount that you can exercise without triggering AMT since it made some changes to AMT. And then if you have somebody that's working with you and you have the opportunity to do projections, I would say go ahead and engage that process. Here at KB, every single client that we have is receiving an invitation to complete a projection for this year. And so they're getting basically throughout the year updates on, hey, do you need to make any estimated tax payments? Do we need to adjust your withholdings at work? But if you haven't engaged that process with somebody or you're looking for somebody, we still are running those. And then in terms of, I know I need to make estimated tax payments, don't wait until April. Go ahead and catch them up now so that way you can have less of an estimated tax payment penalty. And then for donations, the One Big Beautiful Bill Act is bringing some changes in 2026. So in 2026, they're going to be installing basically a floor. They said you're going to have to get over a minimum amount in order to deduct your charitable contributions. And that amount is going to be 0.5% of your AGI. And so it's not 0.5% of your donations, it's 0.5% of your AGI. And so as you get into those higher donations amounts and higher AGI amounts, say you have like an IPO or a tender offer, these start to become really painful. And so what we've been encouraging clients to do is really look at stacking in 2025 because this limitation doesn't exist for 2025. And so this is now a good time before 12/31. If you're charitably inclined and you have the capacity to make the donations, go ahead and do it. On top of that, to add insult to injury, they are saying for those that are in the 37% bracket in 2026, we're no longer going to allow you to deduct your donations at your 37% bracket. You're going to only be allowed to deduct 35%. So that's a big change. So donations become even more important by the end of this year because none of those limitations are going to exist yet. And then One Big Beautiful Bill Act did help us in some ways. So if you have under $500,000 in AGI, you can deduct up to $40,000 in state and local taxes. For most California people, they're like, I meet that on a good day. Like what? I don't really care. But for those that are in Washington or Texas, Colorado, make sure that you paid your property taxes by 12/31 so that you can take advantage of that $40,000 SALT limit. Now, once you reach over $600,000 in adjusted gross income, then you're going to be back down to the $10,000 limit. So just something to think about if you know that you're under 500,000 and you're in one of those states that maybe doesn't have such an aggressive income tax rate. And then if you have been considering gifting to individuals, the current year maximum is $19,000. For married couples, that's $38,000. And so what you can do by the end of this year is give that money, and then we're going to reset on 1/1/2026. And so then you can give it again. And so if you have someone like, a brother, a sister, a child that you want to give to, then you can basically try to get that done by the end of the year and then give again without triggering anything into your lifetime exclusion. And then if you haven't done it yet, you can complete your tax loss harvesting. So your portfolio, if you look at it, that's something we're doing here at KB is saying, hey, what do we have in terms of harvesting losses? And so we'll go ahead and take all those and we'll make sure that we get the capital gains as low as we can because you're in your highest tax brackets now. You're going to pay less taxes later on. And so that's something to think about. But if you are going to do this by yourself or if you aren't working with us, make sure that you don't buy the same stocks within 30 days because otherwise you won't be able to deduct your loss. And then also with One Big Beautiful Bill Act, we are losing our energy efficiency improvement credits. And so by 12/31, you have to have any improvements done and paid for in service to get the credits. And so those that are installing solar panels on their house, it's not enough to just pay for them. It also has to be that the work's completed. But those credits go away at the end of this year. And so it's really a great opportunity if you've been thinking about it. And then we have other items that you can take advantage of. The timeline's not quite as tight. They have to be done by April 15th. But if you have a high deductible health plan, then you can contribute to your HSA. For this year, 2025, the single limit is $4,300. The family limit is $8,550. And then if you're over 55, you can give an additional $1,000, and that's per spouse. So if you're married, you can give $2,000 basically if you're both over 55 in a family plan. So just something to think about. We love HSAs for later on in retirement when your cash flow might be a little bit more reduced and you have medical expenses, or once you're even past 65, you can just withdraw from the HSA as you need it from like a savings account almost. And then obviously retirement's a big deal for us. And so completing IRA contributions, a lot of our tech employees unfortunately can't give to, traditional and Roth IRAs directly, but backdoor Roths are still a great opportunity for those that are maybe above those limits. And so you'll give to a traditional IRA that's non-deductible and then immediately convert it over to a Roth IRA so that you don't pay any taxes on the earnings from that conversion. And so those are just kind of like a quick run through of what I would have on my radar and what we're thinking about here at KB with our clients. And then we'll start into 2026 and it'll be a whole new year. And hopefully we just keep on going up. So we look forward to talking with you guys.